Well, actually, I think there are two things investors should look out for next year. The two key drivers of financial markets, growth and monetary policy. Both could provide some surprises. The consensus thinks that the economy, the US economy, will experience a soft landing. Now, that's a possible scenario, undoubtedly. But there are still a couple of leading indicators, for instance, the inverted yield curve, that tells us that a recession remains a likely scenario. Actually, a recession remains our base case scenario. And with respect to monetary policy, we have to notice that inflation so far has turned out to be quite sticky. Investors, the market, is currently pricing in that the central banks are basically done and will cut rates starting in spring of next year. Again, here the markets might be a little bit too optimistic. Bond markets undoubtedly look attractive these days, with yields at high levels compared to the past few years, and also considering that we expect an economic slowdown. However, timing the precise peak in bond yields is difficult, as we are not sure that the markets have already fully priced in the future central bank path. With respect to equities, we remain of the opinion that equities offer higher returns than bonds for the long run. However, equities tend to perform really well during a recession, not ahead of it. And as a recession might still only start going forwards, we have to be patient with finding the best entry points. Our investment research shows that when you invest in those segments of the market, the sectors and companies that are spearheading technological innovation, you have a good chance to outperform the broad market in the long run. And in the long run means over a period of 5, 10, sometimes even 20 years. However, investors have to be conscious of valuations. Are valuations today attractive for technology stocks or AI stocks in particular? They are not really cheap, but they are clearly more attractive than 2 years ago. We recommend to be quite conscious of valuations when investing in those themes and to pick the right themes for the long run.